you're seeing all the majors move to DLE, even in very high concentration salars. The PFS shows a post-tax NPV of 950 million with an IRR above 21%.
Welcome back to Rockstock Channel. It is Tuesday, April 14th, and we're here today with another installment in our Getting to Know You series. We're joined for the first time by Ignacio Mehech, CEO of CleanTech Lithium, to discuss the company's progress in Chile, and in particular their Laguna Verde project. CleanTech has had a pretty active stretch of news flow recently, most notably delivering a pre-feasibility study outlining 15,000 tons per annum of lithium carbonate production over a 25-year mine life, alongside what looked like solid project economics for a brine/DLE project. They've also secured a CEOL, a 40-year operating contract with the Chilean government, which is a key milestone and something only a limited number of companies have been able to achieve in Chile. For those less familiar with the stock, CleanTech Lithium trades on the London AIM market under the ticker CTL. The shares are currently trading at roughly 11 to 13 pence, which equates to about 20 to 25 million pounds market cap, or roughly 25 to 30 million US dollars. The stock has been quite volatile, as you'd expect in this part of the market, trading in a roughly 5 to 17.5 P range over the past year, with a recent move higher following the CEOL and PFS news flow. The company has also flagged plans to do a list on the ASX later this year, which could open up a broader pool of lithium-focused investors and comparables. CleanTech has analyst research coverage from Canaccord and Fox Davies. If you'd like copies of that research, please email us at rockstockchannel@rkequity.com. The broader backdrop in Chile is starting to shift. New government, more constructive tone around permitting and private investment, and increasing focus from groups like Codelco and Rio around how to scale lithium production going forward. Ignacio joined CleanTech after spending years at Albemarle as country manager in Chile, so he brings a pretty unique perspective on how the Chilean lithium landscape is evolving and where new projects like his can fit in. We'll spend some time today getting to know Ignacio, the strategy behind CleanTech, and how they're thinking about development, partnerships, and positioning in an improving lithium market. But before we get started, just a reminder that we'll be publishing a written summary of this discussion in an upcoming edition of our Lithium-ion Bull. Please register your email at rkequity.com to receive that directly. And for disclosure purposes, RK Equity is not currently a strategic advisor to nor invested in CleanTech Lithium. And as always, nothing in this discussion should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. And lastly, we'd like to thank our sponsor, USCF Investments, which has been making it easier to get exposure to commodities for nearly 20 years. Their battery metal strategy fund, ZSB, is designed to provide exposure to metals powering electrification, including lithium, copper, nickel, cobalt, aluminum, and silver. And with that, Ignacio, welcome to Rockstock Channel. Why don't we start with your background, particularly your time at Albemarle, and what led you to join CleanTech, and then Rodney will dig into some questions.
Hi, Howard. Hi, Rodney. Thank you for the invitation. I'm very happy to be here with you today. As you were mentioning in the intro, I spent 7 years in Albemarle. I joined the company in 2017 when global demand was less than 500,000 metric tons of lithium. And I stayed there until 2024, the last years as the country manager in Chile and also in charge of external affairs in the whole region of Latin America. So also developing a project in Argentina. And I joined CleanTech roughly a year ago in April 2025, really driven. First of all, because I love this industry, I love lithium. I am very optimistic about the future of the industry. And also because I wanted to be part of something historic in Chile. As you guys have mentioned before, as you know, there hasn't been any new entrants into lithium in the past 30 years. The last one was SQM back in 1996. And I wanted to be part of the next company coming into production in Chile, and I think CleanTech has that unique opportunity. And I think it's been reaffirmed by the last news that we have released to the market that you were mentioning, the PFS and the CEOL, and I'm sure I will talk more about those now.
Great. On that note, Ignacio, so the CEOL, as required for all decrees, is undergoing a review at the Comptroller's General Office. What's the sort of likely timing or indication for a sign-off on that?
Yeah, well, first of all, just to clarify, in Chile, to produce lithium, you need a special contract with the government. It's called a CEOL. There hasn't been any granted to private companies until today, and CleanTech is in the first batch of CEOLs to be awarded to private companies. Only Enami and Codelco, state-owned companies, have been awarded, and so this would be the first. It's in the controller's office since early March, and that it's a rubber stamp basically process, and we expect that CEOL to be out and approved by the second half of May.
Okay, great. So short term then, that's excellent. And then onto your PFS. Your estimated capex, including contingency, is around sort of $50,000 a ton. How have capex costs moved in the past while now that you've done an updated study?
Well, we've seen a lot of increase in the capex costs in the past few years. We released a scoping study a few years ago, and numbers were different. But the PFS is a much more robust study, and now with inflation and everything, we believe we're still in the lowest part of the cost curve in terms of capex. 50,000 is 49.9 thousand actually. It's very competitive, and also DLE. The beauty of DLE is it allows you to be in the lowest quartile of cost in OPEX. So we believe we're very well positioned with the project in terms of CAPEX and OPEX.
Okay, and then just looking at the financial numbers, if you can talk a little bit about that, about the IRRs and so on, but to just discuss what CleanTech used for their long-term lithium price in that study.
Yeah, well, our PFS shows a post-tax NPV of almost 950 million, with an IRR of above a little bit above 21%. And so that those numbers are very positive. Also, if you look at in our PFS on the distribution, just to clarify, because many people have been asking us, this CEOL is fully private. There is no public participation. There's no state-owned percentage in this asset. It will be 100% owned by CleanTech. And so the distribution, when you look at the distribution of income, you find that the company gets to keep around 40% of the income, and royalties amount for only 6%. So these royalties are different to the royalties that SQM and Albemarle have, and are much more competitive, especially with high prices.
And just to touch again on what was the long-term lithium price included?
Oh, yes. Yeah, we use a long-term lithium price of $22.5 per kilo.
Okay, so Ignacio, has the company engaged with potential funders? And if so, how are they thinking about required IRRs and long-term assumptions? Where we haven't really touched base with funders in a while, what's the sort of mood out there?
Yeah, we are actually just starting a process with a company called Catfield Freeman. The process is for the company to find or select a strategic partner to develop the project, and it will be at project level. So that process, we're just kicking it off, and we believe it should be finalized by the end of the year. Historically, we have received many approaches from companies interested in partnering with CleanTech, given the exposure not only to brines, but also in Chile, which is a country that has a very long experience in producing lithium with SQM and Albemarle, and also different from other jurisdictions around the lithium triangle, has a very good infrastructure and a skilled labor. and rule of law. So Chile is pretty unique in those terms. And as I was mentioning, Rodney, we have received a lot of approach lately from different companies within the lithium value chain, and they are interested in the project and willing to talk to us about partnering.
Right. And importantly as well, do you get the sense that Chile is looking to become relevant in the lithium industry again beyond just SQM?
Absolutely. The lithium policy launched in 2023 allowed a few companies that had already been investing in Chile and developing projects to apply to these CEOLs, and CleanTech, given the fact that had invested around $30 million already in exploration in Chile and in a piloting facility in the city of Copiapó, we were very well positioned. The Salar de Laguna Verde, our flagship project, was prioritized by the government, and that's why we're now talking about being the first company to being awarded a CEOL. But we are not the only one. As Howard was mentioning in the intro, Codelco has partnered with Rio Tinto to develop Maricunga, which is the second largest or best asset in Chile, and is coincidentally sits around 40 minutes drive from Laguna Verde. So you can see kind of a new district or a new area of lithium exploitation being created there. And also Enami, and other state-owned company, has announced a partnership with Rio Tinto to develop Alto Andinos, which are a few salars in the same region. This is south of Salar de Atacama, in the region of Atacama, a few, like a 400 kilometers south. And you can already see 3-4 projects in different stages of development there. And I believe there are more to come.
Great. And ideally, when would the market see CleanTech's first production volume?
Look, in accordance to our PFS, it should be early first quarter 2031. Now that we have finalized the PFS, our next goals or the next steps forward are beginning the environmental impact study. That takes around a year. We should be filing that next year to get the approval, and then it will be in parallel. We will be doing the DFS, and then would be in FID around 2028. And with that, it is realistic to believe that by late 2030 or early 2031, we'll be in production.
Okay, great. And then with that in mind, what are the next steps for a definitive feasibility study and the timing and cost around that?
Yes. As I was mentioning, we are planning to begin the environmental impact process preparation. And then in parallel doing the DFS, we want to, as we are in the middle of a strategic partnership process, what we want to do is really wait until we have selected the partner that will accompany us in the development of Laguna Verde to begin the DFS. And I also believe we want to do a little bit more exploration. We have acquired new licenses within the area of our contract, of our CEOL, and we want to explore those areas for additional resources and also do some reinjection testing. We believe that between now and FID, we should be spending between $30 and $40 million. And after FID, of course, we need to start doing project finance.
Ignacio, you mentioned Maricunga. Rodney and I used to work for Lithium Power International a few years ago. That stock ended up, getting bought for $300 million. There was only one bidder. There was a lot of shareholders who were lamenting that was a low price relative to like the $1 billion acquisitions that happened in Argentina. But that I recall was a very high grade brine, I think over 1,000 ppm. Your project is, less than 200 ppm, although we'll put up a slide here, like you're quite close to Maricunga. But Chile relative to Argentina is known to have better infrastructure in some ways. They have a skilled labor force. And I was looking, Rio Tinto is developing Rincon, which is a lower grade resource, but I was looking at that grade. I mean, the grade of that resource is like 250 to 350. The overall economics that you're putting out there are very good. They look like almost conventional salar brine economics, even though the capital intensity may be a little bit high. So how do we get comfortable, like with advancements in DLE? Just the headline ppm is low, right? That's just a fact. But on conventional salars, DLE is being applied to conventional salars. So just, how do we get comfortable that this is gonna work?
Yeah, well, a lot of great questions in one, Howard. But yeah, so let me start by talking about Maricunga. As you mentioned, Maricunga was originally an evaporation pond project, and they actually received their environmental permit with evaporation ponds. But now that Codelco acquired Lithium Power and partnered with Rio Tinto, what they have publicly said is that they will look to do DLE, and therefore they will again need another environmental permit that enables them to use DLE. So again, when people speak about DLE and some people are cautious about whether it will work, you have Rincon, but you also have this sign in Maricunga. Last 2 weeks ago, I think Albemarle in Chile also filed an environmental permit to do DLE in Salar de Atacama. And I was yesterday in a seminar, a CRU seminar here in Chile, within the CESCO week, and Novandino Lithium, previously known as SQM, was announcing that they will also file an environmental impact study to do DLE in Atacama June, July. So you're seeing all the majors move to DLE, even in very high concentration salars. And that's desirable. But for us in CleanTech, with as you were mentioning, Howard, lower concentration brines, DLE for us is a must. And not only from the sustainability perspective, but also from the operational perspective and to be able to produce economically lithium carbonate. So we have done a lot of tests on DLE with our brines. We have actually tested many resins over the past few years. We built what was at some point the largest piloting facility in Chile and in Latin America for DLE. There we have a demo scale plant, and we tested several resins, as I was mentioning, and we selected Landscience, which is the resin that works best with our brine. We have a recovery rate of over 90% with those resins. And what we've been doing since then is finalizing the whole flow sheet post-DLE to get to lithium carbonate. And in the PFS, you will be able to see that we have come up with a flow sheet that is, first of all, realistic, operational, with a lot of off-the-shelf equipment, and also very competitive. Our OPEX sits below $6. It says $5.8 from DLE to lithium carbonate. So what really DLE enables is us to get lower grade brines into battery grade lithium carbonate. And that couldn't be done without DLE.
Okay, that's great. So there's been a change of government in Chile, and so I've watched Chile on and off for a long time. As we mentioned, we track very carefully, all of the concessions, with Eduardo Bertrand back in the day, for SQM and Albemarle, but under Boric, right? For a number of years, there was this, he's nationalizing, Chile, but then you had an auction before. I think Rio bought 2 assets, at the same time or soon after they bought Arcadium. I don't know what you know about those assets, but this dynamic that like the government was going to own at least 51% of all the assets, that's not your project. You own this. Yeah, if you could just talk about all of that for investors. Again, it's not every day that we speak about Chile, in this way. So if you just give us color and refresh our viewers for those who have looked at the history.
Happy to. So look, first, very basically, we all know Albemarle and SQM sit in Salar de Atacama, and they have been there for decades, 30 years in the case of SQM, 45 in Albemarle's case. But after that, there were no new entrants. And what the government decided, the previous government, in their lithium policy, is that they were going to divide salars between strategic and non-strategic. In strategic salars, the state had to have a majority stake, like in Atacama, where SQM merged with Codelco and created Nova Andino Lithium. In Maricunga, where Codelco is joint venturing with Rio Tinto, and in Alto Andinos, where Enami is also joint venturing with Rio Tinto. But there were another group of salars that were fully available for private companies to develop projects. And ours is one of those salars. There are around 7 CEOLs or special contracts awarded and in the process in the Controller's office to be approved, to be signed. And all of those are 100% owned by private companies. So in our case, what we have is a 40-year contract with the state of Chile that freezes all the conditions and for the contract, including the royalties, etc. So we have 40 years of certainty on the conditions that we will be facing for the development of Laguna Verde. And as I said, if you look at the numbers, at the royalties that you need to pay and everything, we get to keep roughly 40% of everything that we sell. So it is a very competitive environment. And with this new government, it's also in discussions to lowering the tax rate for companies. There's also what is being discussed is the improvement in the efficiency of environmental permitting. So there are a lot of tailwinds for projects in Chile, especially in the natural resources industry. And between those, in lithium, CleanTech is the best position to be in operations before anyone else.
Okay, look, that makes a lot of sense. As I'm looking at it, like we have the RK Equity scoreboard, and we have salars, conventional salars, then there's DLE projects. So for our viewers here who are familiar with looking at Argentine brines or smackover opportunities, or Leduc Reservoir, or in Alberta, or Utah brines. There's not that many, to my knowledge, in Chile. I don't know. There's a company called Lithium Chile, but I think they have an Argentine asset. So I just like refreshing. The lithium market is much better than it has been in quite some time. We interviewed, your former CEO before you joined, Ignacio, I guess more than a year ago. So it's been a very long time since we have scheduled this kind of like update, getting to know you interview. But and as I'm doing that and in real time thinking about your company at 20 million or 25 million, US dollar market cap, I guess, how much cash do you have? You said you've spent 30 million to date, and you have another 30 million to spend probably to get to DFS. What's your cash balance now? And because obviously to finance $750 million, you're going to need to do so off of a much higher market value than today. And that's going to be, part of your ticking, milestones, along the way. So what's your cash balance now? And I guess, what's the thought process in connection with the ASX listing later this year?
Yeah, well, last year we did a raise in August, and it allowed us to move forward until mid this year. Then I think a month ago, we announced that the government had reimbursed us roughly £1 million from VAT expenses that we have made during the development of the project. And we're also in this strategic partnership process. We're looking for the partner that will come to support the development of the project, to also be supporting from the end of this year until FID, and then support us during project finance as well. So we have a lot of plans in that regard to how to move the project forward. And that also includes, as you were mentioning, listing in Australia. We expect to be listing in the third quarter this year in Australia. There's a lot of very savvy investors, people that know about lithium, that believe in DLE in the Australian market. So we'll be looking to meeting them soon, telling them about our story, and hopefully getting a valuation that is similar to our peers in the Australian market, companies that do DLE in Australia or that have DLE projects, Australian companies that have DLE projects, whether in the US, Argentina mainly. Because as you were mentioning, we believe that we need to compare to them and not to where we are today. And just let me go back a little bit, Howard. When you were mentioning the smart cover, I didn't want to miss the opportunity to tell your audience that the technology, the DLE technology that we're using, is actually the same technology that is going to be used in the standard lithium project in the smart cover formation. We use the same DLE technology. So it is proven. It's a company that has done 3 years, I believe, of testing with those resins, and
Is
they
that
have behaved.
Aquatech?
It is, yes, it's, but it's in the end, it's a company that Aquatech has a license to use the resins.
Right.
In our case,
Okay.
it's Lanchen, which is the provider of the resins.
Okay. Well, Standard Lithium is trading, I think, at like $1 billion market cap, and the Argentine DLE story, I think you were referencing, is Lake Resources. I don't know what their market cap is now, but I presume it's higher than 25 million US dollar market cap, which is where you are. So, okay, Ignacio, this is very helpful to go through the CleanTech story, but also to get to know you better. Obviously, coming from Albemarle as country manager for lithium in Chile is a meaningful credential. You clearly, love the country and love the commodity of lithium, and and you have Canaccord as a broker. You talk about an ASX listing. I don't know of any broker who I think has done more financings and represented this sector, better than Canaccord has in the Australian market. So I think in raising the profile in Australia, that makes sense. AIM is not the ideal market, I think, for lithium historically, as we've observed. So thank you very much for taking the time. It's very early, in this process, I guess, but you do have significant milestones. People could put their head around PFS economics, which look quite attractive using not aggressive lithium carbonate pricing. And the thematic of brines, being low cost for carbonate, for LFP, for battery energy storage is something we've been arguing regularly on this channel. The market is not fully appreciating, the relative valuation of South American brine projects relative to others, based on that thesis. So,
Howard, just one more comment that I wanted to share with the audience before finishing. And when I mention infrastructure, it is just the fact, for example, that the international highway it is sitting less than a kilometer away from the project. It is the fact that the port is 4 hours away from the operation. So you don't have what happens in Argentina. You're 1,000 kilometers away. And then also in our PFS, we decided to split the plants. So we have the DLE, purification and concentration phase in the Salar, but we have the carbonation facility in the city. The city is around 45 minutes away from the ocean. And we believe that if we are the first comers, as we believe will happen, we'll have the opportunity to not only process our brines from Laguna Verde. We also have a second project called Viento Andino. We can talk more about that in another call. But we also believe we can process brines from third parties that come after us. And in that regard, we believe we have that opportunity to become like the centralized facility that helps other projects develop with lower capex, and in the same turn allows us to increase or grow our facility and to be selling more carbonate than when we would be selling just from our projects.
Okay. One final question. Now you made the infrastructure comparison. What about a elevation, altitude comparison to Argentina?
It is similar. We have our Salar is around 4,000 meters in altitude. As I was telling you before the conversation, we are 40 minutes drive from the Maricunga Salar, which is where Rio Tinto and Codelco will develop the project. And in Chile, we are used to developing projects in altitude. So we have copper mines, we have gold mines, and lithium operations in altitude. So it shouldn't be complex. The difference with Argentina, as I was saying, is we are 4 hours away from the ocean, driving safely instead of 1,000 kilometers or more. And we have access to electricity, clothes, water, etc. So it's a whole different world with Argentina.
Excellent. Ignacio, thank you very much for this reintroduction of the CleanTech story and yourself to our viewers. And we very much look forward to following up with you in coming months and quarters as you tick further milestones and ahead of your ASX listing.
Thank you, Howard. A pleasure.